Good evening. My dear students, today we will discuss about suspense account. देखिए suspense account किस तरह से create होता है, first you should learn that. Basically, in financial accounting, this lecture is for the students of O levels accounting, final year. So basically what happens, final year means grade 11. You people are going to take the examination. The students always take the examination, they never give the examination. The teachers, they conduct the examination. So basically what is happening, when we talk about suspense account, we should know that in financial accounting, we have two things. Number one, financial recording, and number two, financial reporting. Recording starts in such a way that at first, there is an information which is a financial information, and that information is called transaction. We must remember that a transaction is a financial information, number one, which must be in past, and number two, which should contain money value. I repeat, a transaction is a financial information which must be in past and which should carry a money value. I purchased a car by cash, that is the transaction. So then what do? We record the transaction to day books. We have 6 day books: sales day book, purchase day book, sale returns day book, purchase return day book, journal and cash book. And then from these day books, now the question arises that a transaction should be recorded in which day book? The answer is, if the transaction is a cash transaction, it should be recorded in the cash book. If this transaction relates to sale of inventory, it should be recorded in the sales day book. If the transaction relates to purchase of inventory, this transaction should be recorded in purchase day book. If there is sales return, then we should record the transaction in sale return day book. And if the transaction relates to return of purchases, this should be recorded in purchase return day books. So basically what happens, we record the transactions in the day books after making the source documents. So whenever there is a transaction, after transaction we make the source document. After making the source document, what do? We basically make day books, and from day books the data goes to ledgers. Ledgers are software, big softwares or thick books. So in ledgers we have accounts. We have journal ledger, sales ledger and purchase ledger. And what do? Recording the data, the financial information, which is called transactions. So transactions are recorded at first. We make the transaction. Transaction happens at first. Transaction occurs, I should say. So transaction occurs, and then what do? We make the source document. And then after making the source document, data goes to day books. From day books, the data is being transferred to ledgers. Here the double entry starts. Accounting is based on double entry. And when we make the double entry, we should know that we have five types of accounts, and these are very clear. CLEAR. C for capital, L for liabilities, E for expenses, A for asset, and R for revenue. I repeat, CLEAR. C for capital, L for liabilities, E for expenses, A for asset, and R for revenue. And then what happens? We record these transactions. We record a transaction, in the day books, then data goes to ledger, and whenever we record the data in the ledger, it means we are recording the information in T accounts. You understand? It means the ledgers contain T accounts, or I should say that all the T accounts are kept in 3 ledgers. We have 3 ledgers: GL, general ledger, SL, sales ledger, and PL, purchase ledger. And then what happens, a specific system which is called system of double entry, it starts. Every debit has a credit, and that's called dual aspect concept. So what do? We record the data in such a way that, for example, I make a transaction for you. Munawar Hameed purchased a car by cash. So what items are involved? Car and cash. What is their type? Car is an asset. Cash is also an asset. So when I purchase the car, it means the car asset account is increasing and my cash is going out. So cash is decreasing. Now we are supposed to see the rule of double entry. The double entry rule, it was invented by Lucas Piccoli in 1454. So what does he say? He says every debit has a credit. Dual aspect concept. So what happens? We record this double entry, this transaction in a way, and that is called, we are recording in double entry way. Then what happens? We go to the cash book. From cash goes down. You can consider chapter number 13, which is cash book. And then what happens? We are supposed to open a T account of car in general ledger. You can read chapter number 5, in which all the ledgers have been given. The concept of T account is being given. Chapter number 13, business accounting 1 by Frankfurt. Chapter number 5, business accounting 1 by Frankfurt. So double entry is prepared. And now what happens? This double entry is recorded from day books and from ledgers to the trial balance. So what is chapter number 6? Business accounting 1. Business accounting 1 by Frankfurt and Alan Sangster. Then what happens? When you record the data into the trial balance, chapter number 6, you can read chapter number 6. Trial balance is a list which has the mathematical accuracy. In trial balance, we have 3 columns. First column, name of account. The second column, name of account or title of account. The second column is debit column. Debit does not mean increase. Credit does not mean increase. Debit and credit, nothing to do with increase and decrease. Debit and credit basically are two sides of a T-shape. When we record assets on the debit side, it means we are recording on the left hand side. When we are recording, when the asset goes down, we say it is credited, so we record on the credit side. So what happens? So when you record the data in the trial balance should be balanced. Chapter number 6. So when your trial balance is balanced, it means mathematical accuracy is there. But still, there are few errors. And these errors are called errors not affecting trial balance. What did I say? Errors not affecting trial balance. And these errors are recorded. These errors are there. And the trial balance is balanced. But these are errors. And these 6 errors are, I created a mnemonic. And that mnemonic is COCROP. COCROP. C for commission, O for omission, C for compensation, COC, R for reversal, COCRO, O for original, and P for principal. So these 6 errors occur. For example, I purchased goods from Mr. A, but I recorded in such a way that I recorded that I purchased goods by Mr. B. So Mr. A was my creditor. I did not credit Mr. A, but instead of crediting Mr. A, I credited Mr. B. So what happened? My double entry is complete. Purchase debit, Mr. B credit. Although Mr. B is not my creditor, but I made a mistake, and in place of Mr. A, I recorded Mr. B. So trial balance is balanced. This is basically what? Error of commission. Similarly, we have 6 errors. But today's topic is not errors not affecting trial balance. Today's topic is suspense account. So suspense is what account? It means you made an error in such a way the trial balance is out. Wow, the trial balance is out. Wow, you are in the trouble. I'm sorry. There is not a wow. There is okay. There is a challenge. There is a challenge. The trial balance is not agree. It means what do? In general ledger, you create a temporary account, and that specific temporary account is known as suspense account. So what do? When you record the suspense account, it means you see the trial balance. If the debit side is more and the credit side is less, so what do? To match the difference, you are supposed to bring it up. So both the sides of the trial balance should be balanced. In the trial balance, as we know, chapter number 6, business accounting 1, Frankfurt, we know that first column is name of account, second is debit column, and third is credit column. So some items are on the debit side, some items on the credit side. The trial balance is balanced. That's good. Wow, life is good. But suppose if the trial balance is not balanced, if there's a difference, then we are going to create a suspense account. At this point of time, basically what's happening? At this point of time, we go and find out that what are the errors. And there are few errors due to which the trial balance is not balanced. So this was the background, that how do we create a suspense account. We create a suspense account because of our trial balance was not balanced. So we create the suspense account in the general ledger, And then there are few errors which are the reason of the suspense account, and those reasons we come to know when we make the track balance. And now we are going and we are searching. So then we found, then we can find out that what are those errors. In the second part of this video, I will discuss about that what are those errors. Thank you very much.